Welcome to Daily Crypto, episode 33. We're diving deep into the latest movements and insights from the world of digital assets. Today, we're tackling, well, a really fascinating question. Is crypto finally shedding its Wild West image? Is it truly maturing into, a global financial powerhouse? We'll unpack how things like market resilience, these massive institutional plays we're seeing, and evolving regulations are painting a very different picture for digital assets and what that really means for you.
Absolutely. It's an incredibly dynamic environment we're watching unfold. It really is. What's truly compelling here, I think, is just how quickly events can shift. It offers a constant stream of new information for us to analyze and, well, try to understand.
Okay, let's unpack this then. Let's kick things off with a glance at the current market landscape. You might have noticed Bitcoin hitting a pretty significant milestone recently, pushing past that psychologically important $100,000 mark. That's a big number.
It is a big number. And while Bitcoin's surge past $100 grabbed headlines, the underlying story is maybe even more critical. It's swift rebound amidst all those geopolitical tensions.
Right.
You saw it briefly dip below that six-figure threshold,
Right, yeah.
only to rebound as the market kind of absorbed those fears related to the Middle East conflict escalation.
Right.
And this kind of resilience, even when global stability is tested, it offers a pretty powerful insight into the market's evolving maturity, I'd say.
Interesting. And beyond Bitcoin, how are the other key players reflecting this trend? Are they sort of following a similar trajectory, or are we seeing them carve out their own distinct paths?
Well, many of the major altcoins have shown a similar kind of underlying strength. You've got Ethereum sitting around, what, $2,221,
Yeah.
BNB at $622, and Solana, which just keeps popping up as a hub for innovation, that's around $132. XRP also saw a solid push, getting near that $2 mark. These aren't just isolated price points, though. They suggest a broader market that's absorbing shocks and pushing forward, often mirroring Bitcoin's lead, sure, but also demonstrating their own, independent momentum sometimes.
It's also fascinating to observe that unique corner of the market that is meme coins, always a bit wild. We saw notable jumps from names like Shiba Inu, Pepe, Bonk, some showing, decent single-digit percentage changes. Dogwoof Hat and Popcat also registered some pretty significant upticks. For you, what's the real takeaway from these movements? Is it just noise or something more?
Well, these shifts, especially in meme coins, they definitely highlight moments of intense, often community-driven activity. It's a good reminder, I think. While the large cap assets signal the macro trends, these smaller tokens can experience these really rapid, though sometimes fleeting, shifts purely based on sentiment or, viral narratives. They're kind of a pulse check on the more speculative and, let's say, enthusiastic corners of the market. They often react super swiftly to any positive news within their very specific ecosystems.
Gotcha. So we touched on geopolitical tensions earlier, particularly relating to the Middle East. Bitcoin's immediate dip and then that strong recovery. It's quite a story. What does this really reveal about how global events truly intertwine with the crypto space now? Is it less insulated than people thought?
Yeah, that raises a crucial question about crypto's insulation, or maybe lack thereof, from global events. We saw crypto markets take a pretty significant hit right after those reports of U.S. strikes on Iran, and Bitcoin ETF demand specifically dropped sharply because of those geopolitical jitters. It clearly shows that even a supposedly decentralized asset isn't entirely immune to, well, traditional global instability. Investors, particularly the institutional ones, they still tend to de-risk during those times of uncertainty. It's pretty standard behavior.
But as you said, Bitcoin clawed its way back above $100,000. How do you interpret that bounce back? What does it reveal about the market's underlying sentiment and maybe the long-term outlook?
That resilience is certainly compelling. For someone navigating this space, for you listening, it suggests a market that's becoming more adept, perhaps, at distinguishing short-term noise from long-term conviction.
Okay.
While the Dow Jones was kind of flat amid muted reactions to the strikes, the crypto market reacted much more distinctly, right? Showcasing its unique risk profile. Arthur Hayes, who's a well-known figure in the space, he voiced optimism, suggesting this weakness will pass regarding Bitcoin's slide under $100K.
Right.
However, some analysis also suggested the BTC crash wasn't, quote, no accident, with price charts maybe warning of potential weakness beforehand. So it encourages critical thinking about relying solely on headline news versus looking at underlying market signals, technical indicators. It's complex.
Yeah, definitely.
But the quick recovery does imply a deeper, persistent buying interest under the surface.
But what's perhaps the most compelling development we're tracking right now, I think, is this undeniable surge of traditional finance players entering the space. This isn't just about small startups anymore, is it? What are some of the standout examples that really illustrate this shift?
Oh, absolutely. What's truly fascinating here is the sheer scale and variety of institutional engagement we're witnessing. Take Fortune 500 firm Pfizer, for instance. They're set to launch a stablecoin on Solana.
Wow.
I mean, that signals a serious commitment from an established financial giant. They're moving beyond just holding crypto to actually integrating blockchain tech into their core services. It implies a broader acceptance and utility that was, frankly, unimaginable just a few years ago.
And it's not just new stablecoins or payment solutions, right? There's also significant Bitcoin accumulation happening by large entities. It's almost like they're seeing it as a new kind of treasury asset.
Exactly. That's the key shift, I think. We're witnessing a paradigm shift where Bitcoin is being integrated as a foundational, almost treasury-level asset within traditional finance structures.
Yeah.
You mentioned Pompliano unveiled ProCap Financial, eyeing a $1 billion Bitcoin play via SPAC.
$1 billion.
Yeah, that's a special purpose acquisition company. For those wondering, a specific vehicle for bringing private companies public without a traditional IPO. Then you have Cardone Capital acquiring 3,000 BTC in a pivot to a Bitcoin-backed real estate strategy. That's interesting.
Very interesting.
Japan's Metaplanet recently added another 11,111 Bitcoin, bringing its total holdings now to an impressive 11,111 BTC. That's a significant corporate treasury move. And a Norwegian mining firm, Green Minerals, plans to raise $1.2 billion just to establish its own Bitcoin treasury.
So these aren't just like isolated bets. We're witnessing a fundamental reevaluation, moving beyond speculation maybe towards strategic financial planning.
That's exactly how it seems. And what are the broader implications if this trend truly scales? If it moves from just speculation to a profound shift in how corporations view digital assets? That's the multi-billion-dollar question, isn't it?
It really is.
And you also have NYSE-listed Sequence announcing a $384 million fundraise to launch its own Bitcoin treasury, though that's subject to shareholder approval. This shows publicly traded companies are increasingly comfortable making such bold moves, albeit, with due diligence and shareholder transparency.
Right, they have to be.
What's equally compelling, I think, is that despite those geopolitical tensions impacting some demand, crypto funds have actually defied these concerns. They saw $1.24 billion in inflows over a 10-week streak recently.
Wow, even with the tensions.
Exactly. It shows persistent underlying institutional conviction that isn't easily swayed by short-term volatility. It points to a future where Bitcoin could genuinely become a mainstream, diversified treasury asset for corporations globally.
Okay, so with all this traditional capital flowing in, the conversation naturally shifts to how global financial systems are adapting. That brings us to a really critical piece of the puzzle: regulation. How are governments and regulators worldwide now actively shaping the landscape for crypto's mainstream integration? What are you seeing on the global stage?
Yeah, that's crucial. And if we connect this to the bigger picture, we're seeing different regions taking distinct approaches. They're moving beyond just discussions now to actual implementation. Hong Kong, for example, is set to start issuing stablecoin licenses. And you have major players like Ant Group and JD.com already apparently in line. That's a significant step towards regulatory clarity and adoption in a major financial hub. It provides a framework for legitimate use and signals that stablecoins are becoming, well, a core part of their digital economy strategy.
And what about the U.S. and other countries? Are we seeing similar progressive moves or maybe more cautious approaches elsewhere?
It's a bit of a mix. Within the U.S., you have state-level innovation like Wyoming's WYST stablecoin, set to launch soon at the Blockchain Symposium. That showcases a kind of bottom-up approach to crypto regulation and adoption.
Interesting. State level first.
Yeah. And beyond that, we saw Solana ink a partnership with the Kazakhstan Ministry to advance tokenized markets and crypto education. That indicates growing interest in foundational blockchain tech at a national level, looking more at long-term infrastructure.
Oh, okay.
And then on the enforcement side, which is also important, BitGit joined India's I4C Sahयोग portal to support digital asset law enforcement. That's crucial for establishing trust and security by, fighting illicit activities. Each of these moves, while geographically diverse, pushes the industry forward in its own unique way. It's like building the necessary scaffolding for wider adoption.
Right. Building trust is key. But with all this rapid growth and institutional activity, security remains a huge concern for anyone engaging with crypto. It feels like every week there's a new scam or exploit reported. What should you, as a listener, be most aware of right now to protect your assets?
Yeah, this raises that really important question about safeguarding your digital assets in such a dynamic environment. You have to be careful. Changpeng Zhao, or CZ, he issued a clear warning recently about a phishing wave hitting crypto info sites. He urged users to be extremely careful when authorizing wallet connections.
That old classic phishing.
Exactly. It's a critical reminder for everyone. Always double-check the URL and be super suspicious of unsolicited requests to connect your wallet. Phishing is still one of the most common and, frankly, effective attack vectors for bad actors.
And it's not just phishing that you need to watch out for, is it? There have been other types of exploits highlighting different vulnerabilities, too.
Unfortunately, yes. The threat landscape is diverse, and it's constantly evolving. Trezor, the hardware wallet provider, they issued a security alert after a contact form exploit was used in a phishing scam. That demonstrates how even reputable platforms can be targeted. We also saw that story revealed by ZachXBT about a crypto scammer flaunting like $4 million stolen from Coinbase users. Just a stark reminder of the financial stakes involved.
Yeah, incredible.
And in a more technical exploit, the Hack and Bridge, that's a platform facilitating token transfers between different blockchains. It was exploited for $250,000 in HAI tokens, their native utility token, apparently following a private key leak. All these incidents just underscore the persistent need for vigilance and robust security practices. Things like using hardware wallets, using two-factor authentication everywhere you can, and being extremely cautious about managing your private keys. The takeaway really is proactive, multi-layered defense. You can't just rely on one thing.
Absolutely. Okay, let's shift our focus a bit to some of the maybe more exciting developments beyond just Bitcoin and Ethereum, particularly in the altcoin and decentralized finance or DeFi space. What kind of innovations and market movements are we seeing there that might surprise our listeners?
Yeah, there's definitely a lot of creative movement and innovation happening in these areas. Story Protocol, for instance, saw its IP token jump, 15% recently? And reports said whales were buying like $47 million in tokens, teasing big things to come. That indicates significant investor interest in intellectual property on the blockchain, which is kind of a newer frontier beyond just financial assets.
You understand.
And Veda has locked $18 million to push vault-based DeFi further. That suggests continued innovation in how users can earn yield and manage assets decentrally, moving beyond basic lending and borrowing towards more sophisticated strategies.
And what about some of the maybe lesser-known projects that are still making significant strides under the radar?
Well, Polygon's price, for example, is slowly forming what looks like a bullish pattern. That's apparently supported by surging stablecoin growth on the network, which points to a healthy underlying ecosystem, right? Stablecoins facilitate activity.
Right, more activity.
Kaya price also rallied as DeFi assets and open interest gained steam, showing that some foundational Layer 1 blockchains are seeing renewed interest. And AirSwap's AST token notably bucked the generally bearish crypto market with a massive 115% rally recently.
Wow, 115%.
Yeah, which is a truly impressive performance against the prevailing sentiment. It shows that specific catalysts and strong fundamentals can still drive significant individual asset performance, even in a generally cautious market.
So how does all this constant innovation connect back to the broader Ethereum ecosystem, especially given all the ongoing discussions around scalability and efficiency, the so-called gas fees?
That's a vital connection, definitely. There's an interesting perspective out there that Ethereum's recent market share gains might actually be rooted more in a decline of altcoin volume rather than a huge surge in ETH itself.
Huh, interesting angle.
Yeah, it suggests that while Ethereum remains dominant, its growth might be more relative to other segments slowing down. Additionally, the discussion around Alt-ZK solutions. These zero-knowledge rollup technologies designed to significantly boost Ethereum's transaction speed and reduce costs that isn't just technical jargon.
Right.
It's seen as a really vital path to ensuring Ethereum's long-term scalability and viability as the backbone for a truly global DeFi ecosystem. It's basically about building the infrastructure needed for the next wave of decentralized applications.
This constant evolution, not just financially, but technologically, it really is a defining characteristic of crypto, isn't it? And it's not just about blockchains anymore. We're seeing this fascinating convergence with other cutting-edge fields. Perhaps none is more intriguing right now than the intersection of artificial intelligence, AI, and the crypto world. What's unfolding there?
Yeah, this convergence is indeed a really fascinating area to watch. There's an opinion piece I saw highlighting that explainability must be the baseline for AI and financial compliance. That points to the increasing and critical role of AI in financial regulations, especially as AI tools get used for things like fraud detection or market analysis. The demand for transparency and how AI reaches conclusions is huge.
Makes sense. Can't be a black box.
Exactly. And for those of you curious, there's also an ongoing discussion about whether AI for crypto prediction is myth or reality. That indicates a growing interest in using AI for market forecasting. Though its effectiveness is still, let's say, hotly debated, it's a space ripe with both potential and, well, a healthy dose of skepticism right now.
So it really drives home the point that it's not just about prices and trading, it's also about understanding the underlying tech and the evolving concepts that are shaping this whole landscape. It really encourages continuous learning for anyone involved, doesn't it?
Precisely. For example, understanding the evolving utility of concepts like wrapped steth, which basically unlocks additional yield opportunities by making stake Ethereum liquid again, or the nuances and risks of crypto presales, becomes essential for navigating this space and making informed decisions.
Right. Got to understand what you're buying into.
Absolutely. And the market outlook pieces you see often highlight key altcoins, like BERA, INJ, and OP were mentioned recently. That indicates continued diversification and new projects to watch as the ecosystem matures and expands. It's a field that demands constant attention to new developments and also foundational knowledge. It really pushes you to stay curious.
Okay, so as we wrap up this deep dive, it's clear that the crypto world is, well, a constant blend of rapid market shifts, really significant institutional adoption, and those persistent security challenges. It's certainly never a dull moment.
Absolutely. We've seen how quickly geopolitical events can ripple through crypto, yet also how surprisingly resilient and innovative this space continues to be. It's attracting major traditional finance players and fostering genuinely new technologies. It's really a testament to its evolving nature and its growing legitimacy, I think, on the global financial stage.
So what does all this mean for you as someone navigating this exciting yet still pretty complex digital frontier? What's the final thought?
Well, given this blend of increasing institutional involvement, the ongoing geopolitical impacts we discussed, and that relentless technological innovation. And maybe consider this. How might this growing convergence of traditional finance, global politics, and the blockchain push us towards a truly global, interconnected digital economy? And maybe more importantly, what entirely new forms of ownership, value creation, or even social interaction might emerge as a result of all this?
Definitely a lot to think about, as always. Thank you for joining us for this deep dive today. We look forward to exploring more with you next time.